So, alright, guys, let us do a quick market review. Yesterday, I was not able to do a review because I was really engaged in a lot of things, right? But we can do it today. So let's begin. So this is the DXY chart, the dollar index, and remember what I told you guys that we have this volume imbalance here, right? We have that volume imbalance, and we have this fair value gap, right? I told you guys at the same price to maybe drop off this gap down to this liquidity, right? But the reason why price is stalling is because of price is caught between this gap, fair value gap, and this volume imbalance. So price is in a kind of sandwich position. We are having pressure from the volume imbalance, and we're also having pressure from the fair value gap, right? The sell side inefficiency, buy side imbalance, is CB. So we're having this CB here, and we're having this volume imbalance here. So price is caught in a dilemma, is trying to bounce between both. If you ask me, I still feel that price is going to go down because the market is bearish, right? So you have seen the market break low. So if you ask me, I feel the market is bearish and price might go down. But now let us not be too rigid. Now, if you take out your Fibonacci retracement tool and you draw from this swing high to this swing low, you can see that we have our 50% somewhere around there. So now let us be flexible, right? So the flexibility here is that price might, since there is a volume imbalance reacting at price at this point here, if this imbalance here does not hold, there's a possibility that price might come to this higher one, which is what at the discount level, which is what 50% of our Fibonacci tool. Don't forget, if you plot the Fibonacci tool from this swing high to this swing low, you can see that we are somewhere around this area. So the price might choose to want to go for the discount, the premium level, which is the 50%, which happens to be this fair value gap area, which also happens to be what this higher time frame key level, right? So this higher time key level can be a reason why price might draw higher, maybe to this point here before selling, right? And if you look very carefully, we also have this bearish order block here, right? We also have this bearish order block here, which has not been tapped into, right? We have that bearish order block, which is unmitigated, this last up candle. So price might choose to go higher, but this is the last order block that actually took out this structure. So this structure, this high, this order block here was mitigated by this move, right? Watch very carefully. This order block here was tapped into by this move, meaning that this order block is mitigated. Then we had this order block printed for market broke structure. This order block here has not been mitigated because price has not tapped back into it. Now we have this imbalance here, which suggests that price might come up and possibly for this order block. So we have reasons that price might come up since it seems as though this fair value gap is not holding, right? So those are the two possibilities now. Trading is a game of probabilities, all right? So we are trying to be flexible here. We are saying, okay, price might go for this imbalance. Well, if it comes here, that means to go for this order block, right? But if this holds, that means price will just drop up. So we're just caught in between. Let us be careful now. If the market does not, if price does not respect this imbalance here because of this volume imbalance down here, that means we might see price run higher. So I think I just type it in the volume imbalance, which is BI. So I have our volume imbalance here. All right, let's make it capital. So this is our volume imbalance. This one here. If the market does not respect our volume imbalance, that means price might go up to this one here. So we now have either it's here or here. So let's not force trades, right? Let us be flexible, right? So we have either this or this, like any of them. So let's look at the lower time frame to see possibly the 1 hour charts. So on the 1 hour chart, you can clearly see that the market has given us a bullish break of structure. Market has made a swing high, swing low. The high was a bullish break. And from this bullish break, we have taken out this inducement level here. So this inducement has been taken out. This inducement level here. And price is likely going for this 1 hour market structure high. So we might likely see a bullish structure to this high, right? Market might likely long to this since market was to be bullish. So there's a possibility on the lower time frame that price might want to trade for this high. All right, market might want to go for this high, given us a bullish structure, and to that that daily imbalance on the daily that remember that daily imbalance we have here. Markets might want to go for this 4-hour high and possibly this imbalance on the daily chart which we have here, right? So it's a 4-hour chart, obviously. So let's look for DSY now. I see some bullishness on DSY. Look at this liquidity grab here. See price came back to tap into this other block here, right? You can see how price came back to tap into this other block, mitigating it properly. So let's watch that. So we have a very deep indication of this other block here. Market might want to go for this high. They have this internal liquidity here. So let's keep an eye on this. So this is what I'm expecting. The market might likely take out this high and then possibly this high as well. So I'm kind of bullish on the DSY today, right? So let's look at the Euro USD. On the daily chart, you can still see that we have this daily draw on liquidity, all right, and we have this QI here, right? But let's go to the lower time frame to see what market is doing. But if you draw a Fibonacci 2, you can clearly see that price is actually at a premium level. If you take a Fibonacci 2 from swing high to swing low, we're actually at a very clear 61. We're at the 62% peak level, which is what the OTE. So let's keep an eye on that. Let's keep an eye on that. Let's take this up. So by that OTE level, right? This is the level we're in, right? So let's watch what happens here. So straight to the 1-hour chart. 1 hour is giving some kind of there's some kind of bearish on 1 hour. We saw the market take a high, a low, a high, and then had a kind of market structure. So 1 hour is kind of bearish because markets went below this swing low here. Now we have taken out this inducement at this inducement level here, right? So we're taking out this inducement level here, right? So let's just keep an eye on what the pound is, the euro dollar is doing. So we had that break of structure here. Market made an inducement, price has stopped going above the inducement. Let's see the lower time frame. So on the 15-minute chart, market is still bullish. If price can go below this low, that may be a sign of bearishness, right? So let's not force any trade, right? So we are still waiting for a very clear move, right? This is for a very clear move on the higher time frame. All right. So let's just wait for a clear move. Let's wait for a clear move, right? So for GBPUSD daily chart as well. Right, we still have this imbalance here, which I was telling us price might get to. That is imbalance here. Price is playing off this daily fair value gap here. You can see a breaker block I marked earlier. I marked 2 days earlier, so you can see that breaker block level here. And you can also see this imbalance here, right? So this breaker block level here, and then this imbalance here. So markets might still choose to run higher, right? Might choose to run higher. See the breaker block here again. All right. So let's go to the 1-hour chart. So for the 1 hour, the market is temporarily giving a kind of for the 1 hour we are seeing a kind of market breaking lows, right? Market is breaking lows on the 1 hour. And go back to the daily chart. We are we are both at a very, very good premium level. We are above the 50%. Coming back. We're above the 50%. Right, we're above the 50%. So have to be mindful, but this gap might suggest some bullishness, right? So let's just be careful with this, right? Dollars, pound dollar still looks very bullish, right? It still looks bullish. Still looks very bullish, like for real. still looks bullish. So let us wait for the market to give us a clear market structure break. These are daily February gap, and there has been no bearish break on this as yet, right? So we have look at that gap. Still have this trend line liquidity here, which has not been taken. We have this February gap here. So it's possible price might want to go for this before going higher. Right? So remember we're taking out buy side liquidity here, and then we have sell side liquidity to this side. So market might choose to want to go for this sell side liquidity before going for this overall UI here. Right? So let's just be flexible, right? So we see our breaker there. So let us be flexible, right? For 5-minute charts, you can see market took out this low, it made another low, and then took out this inducement, right? So we took out this inducement level here, and then go to maybe 15-minute chart. You can see that price has gone, giving what a bearish break of structure. Market has gone and closed below this swing low here. So we have gotten a bearish break on a 15-minute chart, and then we are playing off this imbalance here. Right? So let's just be mindful of what we are doing for this particular chart. Let's be very, very mindful of what we are doing on this particular chart, right? Very mindful of what we're doing here. Alright, so now we can sell from here, and if we sell from here, we targeting this low, and then possibly this low. But this should be our low of target. Right? That should be our targets if we want to be bearish. So let us mark the body of the candle. This is the body of the candle. That's where volatility is. So that will be our targets if we are going to sell. These are our short-term targets. We have taken out this buy side liquidity. We have sell side liquidity to the downside also. If you have taken out buy side liquidity, this might be the targets here. Since we are expecting some kind of bullishness on the dollar. So this might be the targets for today, today or tomorrow, right? Let's see. So I feel that price might sell off from here down to this point here, right? So let us keep an eye on that, right? So let's quickly look at Bitcoin, which I have been talking about for quite some days now. Remember, I told you guys that Bitcoin should go for 75k level. And you can see that price has been bullish. So we'll likely see price drop today or tomorrow to 75k level, and then that's when I see some sell. I told you guys to not sell Bitcoin yet. I told you guys when Bitcoin was just above that weekly high, right? I warned you guys should not sell Bitcoin yet because price can still go higher, and that's what price has been. Price has still been going higher. So we have the 75k level, which is a bank level. So for me now, I don't have any less on Bitcoin apart from a bullish bias, right? And you can see market is still very bullish. You can see high, you can see some high. Markets came to this other block here. Because this other block here, markets came tap on this other block, made a new high, and then we are still possibly going to make more highs. Right. So for now, I don't have anything on Bitcoin apart from bullishness. And the best thing to do is obviously to stay out, right? So here's the chart quickly, daily charts as usual. They have that breaker block level, which I highlighted there. Price is rejected off that breaker block level, and we are possibly going to run higher, right? So now we have what a liquidity sweep below this low. So market might choose to run off this breaker block level, and this is what the 50% level. So market is bouncing off that 50% midpoint, and might likely do was to run higher. So this is like a resistance level, this 50% level, and price is likely going to go higher, right? If this breaker block holds, and if dollar exists to go higher, all right. So let's just be mindful of that. All right, let's be mindful of that. All right, for Bitcoin. Last pair is GJ. So for the British pounds dollar, remember what I told you guys. They're both still bullish, right? They're still bullish on the 4-hour, on the daily charts. I told you guys I was expecting price to go to this trend line liquidity. You can see price has smashed this liquidity, and this trend line has been taken. Which I pointed earlier beforehand. So this trend line has been taken out, which is very fine. I've taken out this trend line. It's very cool. So let's take it out now. So anything can happen now. Market can choose to react off this low, this mitigation block here, and then run lower, right? So let us be mindful of it. I expect some kind of sales to take out to feed this imbalance and then run lower, right? So remember, we also have this other block which I'm going to tap into here. So this one another PUI here. Market can still choose to go higher for this other block before running lower, right? So we have two PUIs. Other market just to get off this low is what kind of support resistance, or price comes to this other block and then goes lower, right? But overall, the overall picture, we are bullish, right? We have our swing high, swing low, and then our swing high. That's overall bullish. But we're setting some kind of retracement, right? Just to satisfy the feelings, right? So have a wonderful day. See you guys in the chats. Have a wonderful day. Craft easy, take it easy. If you have any question, know how to drop it. Right? Join my Telegram community where I put some giveaways and a lot of amazing stuff, right? So see you guys in the next meeting. Cheers and God bless.